افتتحت الهيئة العامة للاستثمار ندوة بعنوان تأثير المشاكل الائتمانية على الاقتصاد العالمي بالتعاون مع مؤسسة بيمكو الاستثمارية. وحاضر في الندوة نائب الرئيس التنفيذي لمؤسسة بيمكو دكتور محمد العريان، بحضور العضو المنتدب للهيئة العامة للاستثمار سيد بدر السعد والمدراء التنفيذيين وكبار موظفي الهيئة.
بسم الله الرحمن الرحيم. السلام عليكم ورحمة الله وبركاته. Good morning, Your Excellencies, ladies and gentlemen. On behalf of my colleagues at the Kuwait Investment Authority, I welcome you all to this joint seminar by KIA and PIMCO on the impact of the credit crunch on the global economy. I take this opportunity to welcome our guest, Dr. Mohammed Al-Aryan and Mr. Suhail Dar. Our speaker, Dr. Mohammed Al-Aryan, is a distinguished and recognized member of the global financial community. Dr. Al-Aryan is the co-CEO and CIO of PIMCO. He rejoined PIMCO in January after serving. Today, Dr. Al-Aryan will present his views on the impact of the credit crunch on the global economy. His presentation will last about 45 minutes. Please feel free to ask questions after his speech. It is my pleasure right now to request Dr. Mohammed Al-Aryan to present his views.
Good morning. It is a huge honor and a pleasure to be with you this morning, and I would like to express my deep appreciation to Mr. Badr Saad for his very kind invitation to be with you today. My objective today is a simple one. It's to share with you some thoughts on a major financial dislocation that is playing out in the global economy and what it means going forward. Imagine for a minute that we were meeting a year ago. Imagine for a minute that I had stood up in front of you a year ago and I had told you that the next major financial dislocation in the global economy would originate in the most sophisticated country in the world, the most sophisticated financial system in the world, the United States. Most of you would have told me that's a possibility. And then I would have said to you, imagine something else. There will be collateral damage. There's always collateral damage when you have a financial dislocation. But this time, when you look at the newspapers, the images of people standing in line to take money out of a bank will not be coming out of Latin America, will not be coming out of Asia, but will come from the second most sophisticated financial system of the world. And it would result in a nationalization of a bank. And imagine that the changes in personnel from this financial dislocation will not be finance ministers and central banks in emerging economies, but it will be the CEOs of some of the most dominant financial institution in the world, like Citibank, like Merrill Lynch. At that point, you would have said to me, Mohammed, we know Los Angeles is a very long way away. We know you have jet lag from 11 hours of time difference. Perhaps you should go and sleep a bit before you say things like that. Well, that is what has happened. And what has happened is a financial dislocation that has hit at the nerve center of global capitalism, that has disrupted the banks and the credit markets, and that has caused a domino effect in one market after the other. Where we go from here is a question, and I will share with you our own views as to where we go from here. To do that, I will propose with you to talk about the following issues. First, we're going to talk about the key aspects of the current dislocation. Why it occurred and where is it today. Secondly, we will talk about where it's going and why. And thirdly, we're going to talk about the implications for policies and for investors. I have a very bad habit that I have acquired from my years at PIMCO, where the patience of people is very short. They always ask, what is the bottom line? Tell me what the bottom line is first, and do it. I have used that at home whenever my wife's telling me something. I tell her, what is the bottom line? I wouldn't advise any of you to use that at home as a strategy. But for those of you who are curious as to what the bottom line of my presentation is, let me share with you where I hope to take you. I will say that beyond the noise, and there's a lot of noise associated with today's financial crisis, there are significant signals that impact every part of the global business. And those signals speak to two underlying drivers that are not going away. One is economic, one is technical. On the economic side, we have a major realignment of economic power that is ongoing, that impacts such basic things as growth, capital flows, trade, and price formation. On the technical side, we've had a major revolution, financial innovation, for which the system was not ready for. And like any innovation in history, the first reaction is to overproduce and overconsume what's been innovated. And we're now clearing up the mess. These two issues by themselves lie at the heart of what's going on today. They result in a redefinition and reordering of many basic relationships. The process is disorderly by definition. The good news is we have circuit breakers in the global economy. And the three major circuit breakers are now in force. So my second conclusion will be look at the circuit breakers that are now operating. And my final conclusion is that everybody, whether you are a financial firm, whether you are a government, whether you are a multilateral institution, is being challenged today by these changes and has got to adapt accordingly. What started a year ago as something very small has become something very large. A year ago, the subprime segment of the US mortgage industry, a small part of a very large market, got disrupted. And if you go beyond all the noise there are three elements that were key to why something so small has become something so big. The first thing is it happened in a market, the US housing market, that was overvalued and increasingly so. The second thing is that it took advantage of a tremendous amount of financial alchemy, financial magic, that converted assets into tranches and rebundled them, with the result that virtually anybody in the United States could buy a home. It didn't matter if you didn't have income. It didn't matter if you didn't have wealth. The system could produce for you a mortgage that you could afford up front. And the assumption was that house prices would continue to go up, and therefore you could refinance it. And the third element is you had some very eager lenders who were happy to relax standards, and in some cases went into fraud. That cocktail that was most evident in the subprime sector started coming apart. And what it resulted in are tremendous feedback mechanisms. So first, what we saw, as you see from the bottom chart, is what you would expect in any crisis. There was nothing unusual, which is that other sectors of risk started repricing. And that came from a period of very low risk premia, and everybody thought initially this is a very healthy phenomenon. We've had a disruption. It is causing a repricing of risk. That is a healthy phenomenon. But then it struck at the nerve center of the global capitalist system. Suddenly, people realized that the banking system in the United States and Europe had also been involved in these activities through what we at PIMCO call the shadow banking system. Through various off-balance sheet conduits, the banks were exposed to the disruptions that were occurring in the subprime market. Three things happened. First, the interbank market got disrupted. Banks no longer trusted each other in terms of giving each other the benefit of their balance sheets overnight, over 1 week, over 1 month. And you see these from these charts, which is what is normally a very stable marketplace, started seeing many disruptions. Second, people started asking the question, what do I hold in my cash accounts? I'll give you my own example when I was at Harvard Management. I had attempted to take a holiday the week of August 14th. I got away on Monday. On Monday night, I got a call telling me that there are disruptions in the money market sector. So I came back on Tuesday morning, and I brought together our cash management desk. And I asked them, where is our cash? A question that I had never asked before, where is our cash? Not how much cash do we have, where is our cash? And they looked at me and they answered, we have so much cash. I said, I didn't ask you how much cash we have. I asked you, where is our cash? And they looked strange, and I said, well, cash is where it normally is. I said, where's that? And they said, it is with money market funds with our major Wall Street counterparty. I said, what's in our money market funds? And they looked at me and said, what do you mean? I said, what's in it? These were questions that we took for granted. And the answer was, we're not sure. And I said, take it out and buy treasuries. Right? And I said, well,